Everyone, Stats Trader is here, and this is 2 weeks of March recap. Now in this video I'm gonna show you my results. I'm gonna show you my trades for the first 2 weeks of March. Now these 2 weeks I didn't really trade as much as I used to, just mainly because some patterns they wouldn't fit my statistical criteria, and so I would skip them. And also I'm gonna tell you 2 new adjustments for my patterns. The stocks, they get a lot of volume. To be extremely specific with your entries and as well as your exits. If you don't do that, basically your risk-reward ratio is gonna suffer and your profits also gonna take a hit. So this is exactly what happened to me the first week of March. Later on, I've noticed that something is changing, the market is changing, and I looked through my statistics and I found 2 things that I can fix about my entries and about my exits, and this just worked out miraculously for me and I was able to make some money. Okay, so let's just jump to my computer and I'll show you how I did these 2 weeks. Trading recap of these 2 weeks. So the dates are the March the 8th through March 22nd. So as you can see, my total net profit was roughly $1,300 on my TradeZero account, and my biggest wins were as follows: $445 and $370 and $394. So these 2 weeks I didn't trade too much because market is kind of slowing down, and I really tried to narrow down my trades. I basically cut out all the trades with low float because I figured these trades actually lose money, so I decided not to trade low float. And as I made this adjustment, even though the market was kind of hard to trade, I still was able to make this solid profit of almost $1,300 on this account. And for the same time period, I have a profit of $912.29 on my other account, on my Webull account, and I was trading the same patterns that I always trade, for the gap up short and sometimes overextended gap down. And actually I've noticed a few things how these patterns have changed over the course of the last 2 weeks. Now let's talk about the adjustments for the patterns. So as you can see, the stock SPRT, it had a pre-market spike over 300%. So close price was 218 and open price in the morning was 795, so 280 to 300%. So I looked over my data over the course of the last 2 years, and I've noticed that every time you have a pre-market spike over 200%, you always have this morning push. So my thinking here right at the market open was first I need to short, right? Because I like to short these kind of overextensions, but stock started tanking right from the open, so it's not very ideal because I like to short into the spike. So I was thinking, okay, if it drops, you know, and if it keeps dropping, I'm probably not gonna short it, just for the reason that my risk reward is not gonna be very favorable, because I know that on average these kind of stock drop about 20% to 30% to 35% depending on market cap, depending on the float, and depending on time of the day. But for this particular case, as soon as I saw that the stock went down from $8 all the way to $6.70, I was like, okay, this is done. You know, I missed the short, you know, but I did the right thing, and I don't want to risk shorting into this this panic. So then immediately stock, and it went from 690 all the way up to 960, and as soon as I saw this reversal right here, 2 red candles, I shorted it, and I wrote it all the way down here, and I closed half of my position, leaving the other half. First of all, I know there's going to be a spike because this is just statistics, you know, 9 out of 10 times to 100% spike pre-market, there's going to be a push. So that's the first thing. Secondly, I shorted it here. I closed half. Why did I close half? Well, according to my stats, as soon as you hit like 11:30, 12 p.m. New York time, trend is kind of likely to happen, especially if you had a big drop from the morning. This thing called midday spike, and sometimes it happens, sometimes it doesn't. This stock was, I think it was 15 or 20 million float. So these kind of lower float stocks, they're more likely to squeeze midday, according to my stats. That's why I closed it. I closed half of it right here, somewhere in this area. And then, of course, it went up, and I left it to... I wanted to close it the next day, and this is exactly what I did. Yeah, so that's the end of the day. It squeezed, and then today we had a nice morning panic, and I think I closed it right here in this first green candle. I covered my short. So overall, this play made me a little over $500. It was pretty good short, and this is the adjustment for the typical gap up short that I do pretty much every single day. What that means is look over your data, track your data. It's very important. I can't stress how important the data is in trading. It's essential, it's vital. In every single video I talk about it. So don't be lazy, track data, and just by tracking data you'll you know. So yeah. Now let's go to the second adjustment. So as you can see, so this thing happened today, DLPN. This is the 23rd of March. And this stock was, it's a typical gap up short that I like to short into. But today I completely skipped this stock. And why did I do this? Again, by looking at my data, I've noticed that most of the trades, whenever I trade low float means float 5 million and under, I lose money, and I don't know why this happens. And then I kind of figured it out. So imagine you have a very small supply of stock, and let's say this stock gains a lot of volume, and a lot of volume for these kind of stocks is anything over 50 million to 100 million, and they can gain as much as 300, 500 million in some cases. So I knew that this stock is low float, and if it does gain volume, and it had some volume pre-market, it was over 7 million pre-market. So I already knew that right from the open, this thing can squeeze, right? So that's why it's not very favorable for me to short into this stock, because I know because if it's a low float, it's going to be very choppy. And as you can see, there's really no clear trend. It kind of goes up and down, and it's kind of, so it's really hard to make money when stock goes sideways. And typically very low float stocks, they really tend to go sideways, or they can go up or down and then hold, and then you can kind of follow the trend. But that's another pattern that I'm not gonna be talking about, because that's just too much stuff, you know. But basically, yeah, if you see 5 million float or less, stay away from this stock. It's very dangerous, and I'm very happy that I didn't short it. I didn't short this spike or this spike, because I would have lost money. So again, look at your data. Data is extremely important. So these were the two main adjustments. I'm still trading. I don't trade as much as I used to a few months ago, because market is kind of slowing down. But there's still opportunities in this market. You just have to be extremely careful, and you have to follow your statistics, and you'll be good. And thank you guys for watching, and like this video, ask me anything in the comments below, and see you guys next time.